So I take things on an industry by industry basis, and I generally have a more stagflationary type of outlook. So, for example, I don't think the S&P 500 is going to do very well this decade.
Are we on the brink of a fiscal spiral where rising interest rates, soaring deficits, and relentless inflation collide? Discover the insightful analysis of Lyn Alden, a leading investment researcher, as she unravels the complexities of our financial system. Today, we will take a glimpse of Alden's groundbreaking book, Broken Money: Why Our Financial System is Failing Us and How We Can Make It Better, in the context of her recent interview, and explore the critical questions shaping our economic future. From the precarious role of the US dollar as the global reserve currency to the intriguing dynamics of gold and Bitcoin in this turbulent financial landscape. Tune in to uncover the hidden truths behind our financial system's challenges and the potential paths it may take in the future. Stay tuned until the end of the video, where we reveal what Lyn Alden is doing with her investments to protect herself from the upcoming financial turmoil. If you'd like to get a copy of Lyn Alden's new book, please click on the link in the description below. Let's get started. Lyn Alden delves into the complexities of the long-term debt cycle, shedding light on the potential risks associated with what she terms the fiscal spiral. This concept is central to understanding the cyclical nature of debt accumulation and its broader economic implications. The long-term debt cycle, as Alden explains, spans several decades and is characterized by periods of easy credit and low interest rates, leading to a gradual increase in borrowing and spending across various sectors, including households, businesses, and governments. This accumulation of debt sets the stage for the fiscal spiral. The fiscal spiral emerges when debt levels become unsustainable, compelling policymakers to increase interest rates in an effort to stabilize the situation. However, this action inadvertently leads to larger budget deficits, especially for heavily indebted governments, due to the increased cost of servicing the debt. This scenario creates a challenging dynamic where rising interest rates, intended to control inflation, paradoxically contribute to it. Higher borrowing costs can lead to higher prices for goods and services, thus fueling further inflation. In response, central banks might increase interest rates even more, perpetuating a cycle of high interest rates and high inflation. Alden highlights two potential outcomes of this fiscal spiral. One is persistent inflation, where the economy continues to grapple with high inflation rates due to the ongoing cycle of rising deficits and interest rates. The alternative is a recession, which could occur if inflation is successfully controlled, possibly through stringent monetary policies, but at the expense of economic growth. This could lead to reduced consumer spending, business investment, and overall economic slowdown, characteristic of a recession. The implications of Alden's analysis for economic policy and stability are significant. Policymakers face the daunting task of balancing the need to manage inflation and debt levels without precipitating a recession. This requires a nuanced approach to monetary policies and fiscal measures, highlighting the complexity of managing an economy amid high debt levels and the interplay of various economic factors. Alden's exploration of the long-term debt cycle and the risks of the fiscal spiral thus underscores the importance of understanding these cycles and the delicate balance required in economic policy decisions to navigate such challenging economic conditions. Alden also delves into the intricate role of the US dollar as the global reserve currency, a position it has firmly held since the aftermath of World War II. Alden's analysis begins with a historical perspective, tracing the pivotal shift from the British pound to the US dollar. This transition, significantly influenced by the Bretton Woods Agreement of 1944, marked a major realignment in global financial power, reflecting both the economic ascendancy of the United States and the geopolitical shifts post-war. The US dollar's establishment as the anchor of the global financial system was not just a reflection of economic strength, but also a strategic positioning that would have long-lasting implications. Alden then explores the profound implications of the dollar's dominance in global transactions. As the primary medium for international trade and financial exchanges, the dollar's value and stability are crucial to global markets. Countries around the world maintain substantial reserves in US dollars, and key commodities, notably oil, are predominantly priced in dollars. This global dependency grants the United States significant economic and geopolitical advantages, but it also comes with its set of complexities. The benefits and drawbacks of this dominance form a significant part of Alden's discourse. The exorbitant privilege associated with the dollar allows the United States to borrow at lower costs and exerts considerable influence over global financial systems. However, the flip side presents challenges for the U.S. economy. A strong and consistently high demand for the dollar can lead to its appreciation, impacting the U.S. trade balance by making exports more expensive and imports cheaper. This dynamic poses a challenge to American industries, affecting their competitiveness in global markets. Alden particularly emphasizes the impact of the dollar's strength on the U.S. trade balance and industrial competitiveness. A robust dollar can contribute to persistent trade deficits, as it renders American exports less competitive and imports more attractive. This situation poses significant challenges for U.S. manufacturers and exporters who find it increasingly difficult to compete both at home and abroad. Moreover, the global reliance on the dollar introduces vulnerabilities. Shifts in global confidence in the dollar can have far-reaching effects on the U.S. economy. Lyn also addresses the evolving roles of gold and Bitcoin in the current economic environment, along with the challenges and potential transformations in the global currency system, particularly concerning the U.S. dollar and the rise of digital currencies. Alden delves into the significance of gold and Bitcoin, two assets that have garnered significant attention in recent times. She acknowledges gold's enduring role as a reliable component of foreign reserves, highlighting its historical stability and value preservation qualities. Gold's traditional status as a hedge against inflation and economic uncertainty remains unchallenged in her view. However, the conversation takes a more speculative turn when discussing Bitcoin. Alden ponders over Bitcoin's nature, debating whether its meteoric rise in value and popularity is indicative of a bubble. She acknowledges the potential implications of Bitcoin in the financial world, particularly how it challenges conventional banking systems and monetary policies. The rise of Bitcoin, according to Alden, could signify a transformative phase in the financial sector, potentially reshaping how transactions are conducted and value is stored. The discussion then shifts to the challenges associated with the U.S. dollar's status as the global reserve currency. Alden speculates about the future role of the dollar, considering the possibility of a more multipolar and decentralized global currency system. This speculation is rooted in the evolving dynamics of international trade and finance, where emerging technologies and shifting geopolitical powers could diminish the dollar's dominance, leading to a more diversified global currency landscape. In her analysis of gold and Bitcoin, Alden presents a balanced view. She sees gold as a stable and reliable asset, a cornerstone in the reserves of many countries. In contrast, Bitcoin's evolution is marked by greater liquidity and market capitalization, albeit accompanied by significant volatility. Alden recognizes Bitcoin's potential as a new form of money, one that transcends traditional financial borders and offers a decentralized alternative to conventional currencies. Finally, Alden discusses the future role of central banks in an era increasingly influenced by digital currencies like Bitcoin. She suggests that the emergence of cryptocurrencies and stablecoins presents challenges, especially to smaller and weaker currencies. These digital alternatives could lead to a more decentralized monetary system, reducing the influence of central banks and traditional banking systems. Alden's insights point to a future where digital currencies coexist with, and perhaps even challenge, traditional fiat currencies, leading to a more diverse and dynamic financial landscape. Here's how Lyn is approaching investing for 2024. She maintains a long-term positive outlook on gold and Bitcoin, viewing them as prudent hedges against potential fiscal instability, with gold offering traditional safety and Bitcoin presenting a modern, albeit volatile, alternative. Her strategy also includes conservative investments like Treasury bills, T-bills, and Treasury inflation-protected securities, TIPS, which provide stability and protection against inflation. Additionally, Alden sees value in the energy sector, specifically in oil producers, acknowledging the potential for growth in response to global economic recovery and energy demands. Her interest in select real estate and equities suggests a strategic, discerning approach, focusing on properties and stocks with strong growth potential or stability. This multifaceted strategy, blending traditional assets with growth-oriented investments, reflects Alden's adaptability and foresight, preparing her portfolio to navigate the complexities and uncertainties of a financial landscape marked by unprecedented events and challenges. But remember, always do your own research when deciding how to approach your investments. Thanks again for joining. If you'd like a copy of Lyn's new book, please click on the link in the description below.